So there's a new crypto tax law that goes into effect in 2024 for US citizens. A lot of people are worried, particularly if you're new to crypto the past couple of years. In today's video, we're going to look at what this new law is going into effect. And I'm going to share with you my personal opinion when it comes to this particular crypto tax law. Now, ladies and gentlemen, I'm not a financial professional. I'm a cryptocurrency YouTuber. I'm very biased on the future of cryptocurrency. Don't make financial decisions or tax decisions off of anything that I say. I can just tell you my opinion and how I'm addressing this with my own cryptocurrency taxes. Now let's take a look at this for a moment. First of all, let me just say this. Crypto taxes are nothing to be afraid of, but the worst thing that you can do is try to avoid or hide or not pay taxes. It's important that we try to comply responsibly as best we can. And the reason I say as best we can is one of the advantages of being early into this technological financial space is that we have the chance to make incredible financial gains if this technology continues to get developed the way that many of us hope that it will be. But at the same time, we're here early, so early in fact, that there are not yet adequate laws or regulations to truly cover this entire space. We're literally here before the laws and before the infrastructure. And if you think that is a net positive, do me a favor and smash that like button. And if not, then no worries. Hopefully I'll earn your like before the end of this video. So here's what the new tax law is all about right here. This new law requires anyone who receives $10,000 or more in cryptocurrency in the course of their trade or business to make a report to the IRS about that transaction. Now, here's the challenging part. It says it requires anyone who receives $10,000 or more in the course of their trade or business. Basically, if you receive $10,000 or more at any given time in cryptocurrency, I believe it's one single transaction, I believe, but that's not super clear in this wording. However, this is the challenging part. The report must include, you have to report it to the IRS, and that report must include, among other things, the name, address, social security number of the person from whom the funds were received, the amount received, the date, nature of the transaction, and if you don't file the report within 15 days of receiving the transaction, you could be found guilty of a felony offense. Okay, there's two fundamental problems here. The first problem is if you get this because you've made a trade using some sort of DEX, for example, or you've made some sort of sizable trade of any kind inside of a centralized exchange, how in the world do you give a name, address, or social security number for Uniswap or 1inch Exchange? How do you do that exactly? And then, of course, you got to include the date and nature of the transaction. Then this is the crazy one. If you don't file a report within 15 days of receiving the transaction, you could be found guilty of a felony offense. However, nobody knows exactly how to file this report with the IRS. Most of us either we do our taxes once a year, or we do our taxes quarterly in some cases if you own a business. Some people do their sales taxes monthly. But it's not clear exactly how we're supposed to file this special report within 15 days of the transaction, or you're essentially committing a felony offense. Now, this is absurd, and most people are going nuts about this on Twitter and everywhere else. And I've gotten questions from some of you, some of my email subscribers in my Telegram as well, have brought this up from time to time. Now, I'm going to tell you, I do have a full video plan talking about basically 10 things you need to know before you file your cryptocurrency taxes, 10 things you need to be aware of. But let me just tell you how I'm handling this right here personally. First of all, for me, there's been a couple instances where I've received large amounts in excess of $10,000. I'm just going to do the best I can for now. And that's all you can do. I have been in business for myself for a lot of years. I have had all sorts of convoluted, crazy tax reporting things over the years. I've even had some tax issues. The thing that can get you in trouble with the IRS above all else is if it becomes apparent or obvious that you were trying to hide or avoid taxes. So I will pay all the taxes I need to pay the best I possibly can. And then of course I'll seek professional help from a professional tax advisor. But I don't believe there's any way yet for us to be able to comply with this law adequately. Here's the challenge. It gets very difficult to comply with some of these laws. And even because they're so new, when you talk to tax professionals, you're oftentimes going to get different advice from different tax professionals. There is almost no standard answers. But when it comes to cryptocurrency, you just have to be very, very careful. Some of the stuff that I personally invest in, some of the passive strategies that I use, they are literally not addressed in any law at all. The name of the game is just do the very best that you can to comply. It's nothing to worry about in most cases. So don't stress about it. Just keep this in mind. We are in so early, the infrastructure, the legal infrastructure, the regulatory framework is not even here yet. Thank you for watching. This is Crypto Wealth. I'm out.